travel isn't just about destinations, it's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024. Good evening. Welcome to the program. I'm Stephen Grootes. Well, of course, a day still, by a large extent, dominated by the tariff announced late last night after we'd gone off air from the US President Donald Trump. And I think many countries around the world still trying to work out what to make of it. I mentioned earlier today, just in some cases, some of it just doesn't seem to make too much sense. I mean, the idea that the Japanese chief negotiator actually put on a MAGA hat, Make America Great Again hat. They still got punished with a 25% tariff. We got 30%. Some of it is quite difficult to make sense of it. Well, Donald MacKay ready to talk to you in just a moment about that. We'll get reaction from business leadership South Africa too, and of course the rand being affected. The one point I would make before we start our conversations about this is that I have a sinking feeling that actually it's going to be maybe a couple of years before we know what any final rate is going to be. This is going to go on for quite a while, and I think that is going to be the real thing that we have to live with. That's going to be the real challenge in all of this. It's just the sheer uncertainty. You might think from time to time that maybe you're going mad because strange things happen, strange headlines you never expected to read. I was on Bloomberg earlier today, and this was proof that the world's gone mad and not you. I actually had to ask my production team to look at it and make sure that I hadn't lost the plot and wasn't misreading it. The headline was that the Iranian president, Masoud Pezeshkian, had given an interview to Tucker Carlson. I mean, the Tucker Carlson, the right-wing, him in the US. Of all the people you would think would end up on Tucker Carlson's show, the president of Iran. Seriously, it just shows you what people will do. And I mean, if you think about it carefully, to get the attention of the US President Donald Trump, that's how you would do it. It was conducted through an interpreter, in case you're wondering, but still a very interesting media strategy. I wonder what it was like in the room of the Iranian president and who got to say to him, "Sir, we think you should do an interview with Tucker Carlson." 011 883 0702 021 446 0567. Voice notes tonight on 072 702 1702.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, still a huge amount of uncertainty tonight, I think, over what will eventually will be charged at as the final tariff by the US, if indeed the Trump administration ever arrives at a final determination. Last night, the US President Donald Trump sending that letter to our government. He says we'll face a universal tariff of 30%. Many other countries got exactly the same letter, but with different numbers. Japan gets 25%, Indonesia 32%, Bangladesh and Serbia get the same number despite being very different economies. Trump also says there'll still be negotiations. In other words, this is not the final number. Well, at least for now. Donald MacKay is director at XA International Trade Advisors. Donald, good evening. I do appreciate the time. Okay, so for us, a 30% tariff for most goods, the 25% tariff for automotive products, the exclusions for some products like our gold and platinum. What can we understand from this about what Trump's real intention might be?
Yeah, so that's a hard question to answer because it feels as if what Trump is saying publicly and what he's expecting are two different things. So he says they want better access to our markets, but I think that's hard to believe. Vietnam, for example, offered the US duty-free access for everything into their market, and they still got a 20% tariff. So I think this is something a little bit deeper. Perhaps he's still upset about the farm murders. Perhaps he has an issue with BEE. I'm not sure. But whatever it may be, I suspect it's something other than just true market issues.
So I must say, at first blush, I came at it from a different point of view. It seemed to me that if that was the case, he would say so. Rather, if you look at the letter, and you know far more about these things than I do, Donald, let me just be clear about that. But that maybe, if he wanted to make a political point, he would do that. Whereas he still seems to cling to this belief that the very idea of trade is somehow unfair.
Yeah, so, I mean, there is that as well. So hard to argue with that perspective, Stephen. But of course, we never really know what it will be until the day arrives. And even then, we don't know. And we don't know what it will be a week later. So whatever the position is at the moment, I don't think that will be the position on the 1st of August. So it looks to me as if these letters were issued because he wanted to apply pressure to these countries, South Africa included, to see if issuing the letter would not perhaps up the offers that have been considered. Of course, I don't know exactly what South Africa has offered, but that seems to be what he is looking for. So I don't think we get 30% on the 1st of August, but I also don't know precisely what we will get.
You made a point which has really stuck with me at the beginning of all of this, that the real danger is the uncertainty. And we had Liberation Day, then a 90-day pause, then the letter, now another month for negotiation. And that point that you made, Donald, has really stuck with me, that the danger now is the uncertainty. I mean, no one's going to invest in anything that involves trade with the US here or in other places.
Yeah, not only that, they're also not going to want to make those investments inside the US. So, you know, he's bumped up the tariffs on aluminium to 50%. But America just doesn't produce that much aluminium. And, you know, putting a high duty on is not going to make the factories appear any sooner. And if you're at risk of those duties disappearing in a negotiation, then that's also a problem. He's also pulled many of the subsidies that President Biden created under the CHIPS Act for semiconductors. And so those companies who have exposed themselves to the US now face the potential of not receiving all of the money that they had anticipated. So all round, this doesn't seem to be a pro-investment kind of strategy at all.
So much still to happen over the next month. It would seem to me probably maybe a year, maybe 2 years, maybe longer even if you look at the average length of time it takes to negotiate a trade deal before we have any kind of final number.
Oh, yeah. I mean, deals typically take years. And the reason they take years is you want to be really precise with what you are agreeing so that when the next politician comes in, there isn't a misunderstanding of what the agreement was. And you want to avoid disputes as much as possible. So that's a big chunk of why these things take so long. But then on the other hand, you know, Trump in his first term got rid of NAFTA. He replaced it with the USMCA. He said that was the greatest trade agreement ever negotiated. But 1 week into office, and he breached the terms of that agreement. So even if we do strike a deal with the US, I don't really know what it is worth, to be honest.
Sure. Donald MacKay, thank you very much indeed. Such an important point. Director at XA International Trade Advisors. Well, someone who's been looking through all of this, listening to that as well, Busi Mavuso, the CEO of Business Leadership South Africa. Busi, good evening to you. Do appreciate the time. Where does government even start in responding to this? I mean, Donald MacKay's point, can we take the US at its word at the moment? It's a very important one.
Sure. Yeah, no, it's a very tough situation we find ourselves in. Wherever we start, Stephen, we cannot retaliate. So we cannot afford to actually probably maybe explore retaliatory tariffs. A trade war would be far more damaging to the U.S., rather to South Africa rather than to the U.S. And I think instead of probably maybe looking at retaliating, we should focus on strengthening our trade with other countries. You know, I saw on whatever has been shared on the media that some of the countries that have actually been affected, whose tariffs have been reimposed, are Japan, South Korea, Malaysia. And then we need to look at, you know, what are the possibilities in as far as those countries are concerned. And I think we're going to have to just continue on a diplomatic negotiations perspective. We need to find a way of how we de-escalate the tensions and the situation. We have until the 1st of August, and I think I definitely agree that I think this is probably maybe a power move to force us, because I think that has been the frustration of many of these U.S. Officials whom we've been engaging with as business, that the deal is weak, that South Africa doesn't seem to be taking, the engagement seriously. What we've put on offer, is not strong enough, it's not enticing enough. So we'll find that probably maybe this is a move to try and get us to probably maybe take this. And remember, we got to the table late, right? And I think that has been a huge frustration for US as well, to say everyone has been running, trying to put the trade deal together. You have actually just been sitting on your laurels with South Africa. So I think there is that sense, from the US that we are just not taking them or this seriously. So I think this could be a power move that is actually forcing us to probably maybe jump into action and probably maybe strengthen our offer, Stephen.
What do we offer? I mean, do we offer duty-free access? A lot of goods, I think, are close to that, if not that. I mean, what kind of concessions do we make?
That is actually a very interesting one. Because I think the U.S. is already sitting with so many deals. Someone actually raised a very interesting point to say that, a lot of people have actually been offering the U.S. Minerals, and we have offered to buy their LNG gas and so forth. But someone was saying no one sits with the expertise that South Africa sits with in terms of extracting these minerals. Because yes, they can have all these countries from all over the world, offering them minerals, but someone has to go underground, Stephen, to actually extract these minerals. So that is the expertise, being a mining community economy, our wealth as a country has been built on mining. So is that not something we'll probably maybe put on the table, to say that if you have been offered these minerals, surely none of you or these U.S. companies might not be interested to go with some of those environments are very dangerous, and we have that expertise. So probably maybe that is something different, but does require us thinking outside of the box, because this is actually going to be quite decimating when you look at what the economic impact of it is going to be still.
Do you believe any of our political positions, I'm talking about our membership of BRICS, for example, do you think they have any impact on this? My own personal view, and I expressed it to Donald MacKay a few moments ago, is that if that was part of it, Trump would have explicitly said so?
That is actually out there already in the public domain, that there's going to be a 10% tariff. And I think if there's already rumors and murmurs about it, we can expect that it's actually going to hit us at some point. The BRICS-aligned countries are going to get an additional 10%. So think about it. For an automotive industry, for instance, they are already sitting with a 25% tariff, in terms of their automotive imports into the U.S. And now there's the 30% general tariff, pushes it to the 55%. And there's probably going to be the 10% additional BRICS tariff, which then pushes it to 65%. The impact of it, is actually going to be quite dire. But Trump has actually never been shy and has made the point clear, that our BRICS alignment is an issue, for him, and I think the BRICS bloc, and I think the threat it actually poses, to the U.S. dominance and the U.S. power is an issue that is actually engaged with quite openly. So I wouldn't be surprised if all of us as the BRICS partners actually do get that additional 10%. And I think as we plan, let's plan for the West, Stephen, because I think we have we are not in the U.S. good books. Remember, whatever is coming towards South Africa at the moment, it's intentional, it's targeted, it's strategic, it's deliberate. This is not of a whim. So let's expect that we're actually going to be hit the hardest, as a country.
Vusi Mavuso, thanks so much. CEO at Business Leadership South Africa. You with The Money Show. Matete Thulare is the head of FX execution at RMB. Matete, good evening to you. The Rand losing significant value last night in the hours. Recovered a little bit during the day. Weaker again now. This announcement has had a pretty big impact.
Yeah, good evening, Stephen. I mean, the Rand has sank, obviously, today. I mean, investor confidence really took a knock due to the potential U.S. tariffs facing South Africa. I mean, already the Rand falling about 1.5% against the dollar since last night. And I mean, this is the most in 4 weeks. I mean, already, yes, Mr. Trump last night unveiling this 30% hike in tariffs, and obviously in South Africa. with effect from the 1st of August. I mean, we know that he sent letters to over a dozen other U.S. trading partners, including Japan, South Korea, etc. But I mean, South Africa is really seeking to use the coming week to lobby Washington for changes to these planned tariffs. And I mean, nonetheless, financial markets are really rattled. We've seen U.S. bond yields surging, equity indices dropping. We've seen the rand retreat from where we were just a few days ago. I mean, we were around 17.50 against the dollar. It's still a fluid situation, and I mean, these letters from Mr. Trump are likely meant to spark a round of negotiations. So I'd expect that we still have some more announcements on that front over the next few weeks. We still know that the EU is also out there. It's a big one to watch out for. But I mean, you know, the threat of these new levies against South Africa come, you know, as Mr. Trump has extended his self-imposed deadline, and he said that, you know, if anything, the new date for all countries to ink a trade deal will be the 1st of August. But I mean, they've really offered some sort of flexibility, allowing room for negotiations in the final weeks before the implementation of these new tariffs. But yeah, look, it looks like it's going to be really fluid. I mean, like your previous speaker has said, that, you know, there is a talk about the U.S., about South Africa potentially buying LNG from the U.S. However, nothing has been formalized. And I think, if anything, if talks do really collapse, you know, tariffs could potentially rise 30 to 40%. And I mean, already we've seen the Trump administration accusing some of the anti-American, you know, BRICS countries, and obviously saying that they will impose additional tariffs on these countries aligned with the BRICS bloc. So it is really going to be quite interesting to see how do we fare, given the fact that the likes of Japan, we've seen the likes of Tunisia, South Korea, etc., all getting hit last night.
Thanks very much indeed, Matete Thulare, head of FX execution at RMB.
The Money Show.
The markets.
Ryan Hill is head of fundamental sales at Absa CIB. Ryan, good evening. Obviously, like everyone else, you're looking at the impact of the tariffs, and the JSE was not particularly happy.
Yeah, thanks, Stephen. Look, I mean, it's an ongoing conversation, ongoing discussion. I mean, we've even gotten to the point now where we've got markets coining the phrase since May, the taco trade, which is, you know, Trump always chickens out. So no doubt, I mean, he's opened up the opportunity for negotiations and discussions, as your previous speakers have alluded to. But at the same time, he's also suggested that we could see an additional levy on a 10% levy on BRICS countries. So I think the only thing one can sort of feel somewhat certain about is that, you know, there'll be somewhat of an to and fro in terms of Trump's historical approach, and possibly we land in a better place. I mean, it sounds to me, again, as your previous speaker alluded to, it sounds to me like, you know, given that the U.S. is the largest export partner for SA after China, and something like 33% of the $9 billion worth of exports relates to precious metals, that there's going to be a bit of a challenge from the SA administration in terms of the U.S.'s understanding of tariffs that we impose on them. So, yeah, we're just going to have to wait and see. But volatility appears to be the name of the game at the moment. I mean, it's interesting when you look at the U.S. longer term. They've actually had various episodes of unilateral behavior going all the way back to the 20s. So this is not without precedent, but markets don't like uncertainty. And I think this is the one thing that markets are not fully discounting yet. So there could still be some volatility in the air for some time.
Yeah, I mean, it does seem like it. I was a little surprised within all of this at the sell-off in precious metals stocks. I mean, you'd think that maybe, I mean, gold was down too, but gold and platinum shares were down, and I thought maybe gold would benefit from all of this.
Yeah, I think, to be honest, I mean, again, one has to look at the bigger picture context here. You have to look at the fact that, for example, the platinum price has gone up by something like 60% since April. You've got the palladium prices up 30% since the same time. So perhaps a bit of a pullback is not too surprising. Of course, in the context of, you know, what's happening on Trump tariff discussions as well, there could be some uncertainty relating to that. But as a consequence of what appears to have been a bit of a sell-off in platinum and palladium, you did see the platinum stocks come into some pressure. They were down between 2 and 5%. And the gold stocks themselves also under some pressure. And that actually seems to be related to a bit of dollar strength. I mean, the dollar's basically had its worst sell-off in decades. And I think any emergence of some kind of evidence of strength makes market participants, flee for the hills, because the expectation is that typically a strong dollar leads to lower metal prices. So let's see how that plays out.
The Competition Commission announcement basically removing its opposition no longer going to oppose Vodacom's tie-up with Massive over rolling out broadband fiber internet. It does go all to the Competition Appeal Court anyway, but now that'll be a quicker process. I mean, this will have implications in lots of directions. Vodacom up on the day, but their competitors, MTN, Telkom, what does it mean for them?
Yeah, it's an interesting question and an interesting precedent that's being set. So, just for some context, once again, I mean, this deal was initially floated in 2021, and we've had something like 15 updates on this acquisition of the 30% stake that Vodacom wants in Massive. So now that they've agreed that they are going to, impose various conditions, and some of those conditions are very admirable, by the way. Some of them are very socially sensitive. Things like increased number of police stations to be connected with Vodacom's fiber, things like a longer capex cycle, increased coverage and connection commitments, etc. Now that they've agreed to those kinds of things, as you say, the actual appeal court process on the 22nd to the 24th will be largely administrative in nature. One thing that's fascinating is it does raise a question around MTN and Telkom, because MTN has historically stated that it's imperative that they get their hands on a meaningful fiber footprint, and we do think that they're probably going to then still make a bid for at least a part of the OpenServe business, which currently sits within Telkom. So, let's see. Again, it's interesting times in markets always, and I would expect to see MTN making some kind of a bid potentially for part of OpenServe.
Ryan Hill, thanks so much. Head of Fundamental Sales at ABSA CIB.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabotja, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, good to hear from you this evening. 011 883 0702 021 446 0567. I've been following sort of from afar, thankfully not directly and personally, the launch of sort of a private firefighting service. ADT, Fidelity ADT actually have a private firefighting service. I would need to check, but I think they might not actually be the only one. And when you consider that the city of Joburg's had all sorts of problems sourcing firefighters, the actual machines, fire engines, I should say, you can understand why this has been such an issue. And there's sort of a space for people to get involved in this. You would pay basically to have a fire put out. There's a subscription service. I noticed on MoneyWeb today, MoneyWeb today in Cape Town, the head of firefighting is furious, saying that Fidelity ADT's firefighting service is not properly registered and is not a part of their call center. And that if they went, basically there's an emergency system. And that basically if they find that they're putting out fires and they don't stop doing it, they'll call law enforcement. Now just imagine the scene for a moment, right? There's a building burning down. Maybe there's someone trapped inside. You've got private firefighters in their uniform, whatever. There they are. Hoses out, blasting water. And you're going to call the cops. Seriously? Okay. I wish you luck with that. I mean, some things are just extraordinary. Now, look, I'm not for a second saying that a service should not be properly regulated. But really, you're going to call the cops? Sure. Okay, how do you think that's going to look afterwards? Come on. Can everybody please sit together? Can you, as the city of Cape Town or whoever, phone the company, speak to the CEO and say, listen, let's go for a coffee. And if the mood takes you, maybe something stronger, and just sit down and work it out. Come on, this kind of threat does nobody any good.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
Well, a statement from the Competition Commission and then from Vodacom on sends that the Competition Commission's now agreed to drop its opposition to Vodacom's deal with Massive. This means they can now work together to roll out fibre broadband internet services. The Commission had first recommended against the deal. The Competition Tribunal then followed that up by ruling against the deal. The companies did have the support of the DTIC Minister Parks Tau. Legally, the appeal brought by Vodacom to the Competition Appeals Court continues, but it will now no longer be opposed. The Commission won't oppose it. The Commission says it can't speak to us at this stage in the process. Duncan MacLeod is the founder and editor at Tech Central. Duncan, good evening. I mean, this has been the subject of really intense discussion. Frankly, a lot of anger from Vodacom, from other people at the tribunal's decision. Why would the Commission change its mind now?
Yeah, I'm not sure what the answer to that question is. You've mentioned in your intro there that Parks Tau has signalled that he was going to oppose the tribunal's decision in the Competition Appeal Court. So maybe there was some political pressure. I know these regulators are meant to be independent, but I guess it's difficult when the minister you're reporting into doesn't agree with your findings. But I don't know if that's where the pressure came from. It's all speculation. But one has to wonder, after 3 years of this process, whether this couldn't have all been wrapped up a lot quicker than it has been. The amount of money that's been spent on lawyers, the costs associated with not getting a deal over the line when it should have been done 3 years ago are enormous. And hopefully there'll be some self-reflection here by the Commission and even the Competition Tribunal, hopefully, about the damage that they have done in the telecommunications industry by not permitting this deal to go ahead earlier, and also the impact it might have on investors, including foreign investors, who might look at this market and look at the time it's taken for the competition authorities to get this deal through, only to block it and now to reverse their decision. It has a negative impact on investment. People look at this and say, well, this is a market we can't invest in. We can't waste 3 years going through a competition process. We'll take our money elsewhere. So I think there needs to be some reflection by the regulators about this whole process and the period of time it's taken.
So there are changes in conditions. They include things like maintaining lower cost packages in the market. I imagine there's an incentive to do that anyway. Increasing the number of police stations that get free access, that kind of thing. Are they that significant? I mean,
No.
Yeah, well, that's the answer, because that would be material.
I haven't interrogated it in any detail, and we still don't know what the Competition Tribunal's view is on all of this. But yeah, from my first quick reading through the new conditions, they have toughened them up, but it's not significant, and makes you wonder, why didn't these discussions happen in the first place?
I imagine it doesn't cost much to actually, do this for police stations and things.
Exactly.
So the deal gets going. Are you expecting this to lead to big changes in our fibre broadband market, which is being rolled out in many places?
I think so. They have made commitments, and the management. If you chat to the management team at Vumatel, they are raring to roll out fibre in townships across South Africa and smaller towns and places that are not well served by fibre at the moment. But they haven't had the working capital to do that, and I think this deal is going to bring in, assuming it gets across the line, will bring in billions and billions of rand, which are going to be directed into deploying infrastructure in townships, which is fantastic. We should be doing that, and Massive will have Vodacom's cash to go out there and roll out infrastructure. So it's going to benefit consumers. It's actually going to benefit poorer consumers more than wealthier consumers who already have fibre in the northern suburbs of Joburg and the southern suburbs of Cape Town, etc. This is going to take real internet, uncapped internet, to more South Africans, and that has to be a good thing.
I presume that there will be a response from some of the other players. I mean, Telkom are in this space, MTN to an extent. Are we going to see them react in some way? This will put a little bit more pressure on them, I presume.
I don't think from the big operators. I think the big operators are quite comfortable with the conditions as they were already attached to this by the Commission. Certainly, I know MTN had indicated that they were happy for the deal to proceed, and I think Telkom has made similar representations. There was a stronger pushback from the ISP community. I think some of the internet service providers were quite concerned about the potential impact that this might have on them. So whether there's going to be any pushback from the ISP community, I don't know. I haven't spoken to the industry association yet, but in terms of the other big competitors to Vodacom specifically, I don't think there's going to be much pushback.
Duncan MacLeod, thank you so much, founder and editor at techcentral.co.za. Interesting the way that Duncan approaches it, suggesting this might lead to calls for reflection. Might be a moment for reflection on the part of the competition and the tribunal. And I'm reminded, of course, of some of the other issues that we've had around the competition tribunal. And there was a piece in News 24 today that seemed to be suggesting that, in fact, the competition tribunal was not directly or necessarily responsible for preventing the deal between Piermont and Sunbet. And this was the deal that would essentially have seen Emperor's Palace being sold and would have seen a real change in our gambling industry. It did make me wonder about how all of this is playing out. We spoke to, you may remember, David Lewis about this last week, and he said you also couldn't say the competition tribunal sort of delays in this were the reason. He did say, though, that they were, and he has said elsewhere, that there are problems at the tribunal. The question, of course, is what happens now. And in some ways, the minister, perhaps, Parks Tau, is the one who now needs to act, and by which I don't mean remove the independence of any of these bodies or act in that way, but just appoint people to the tribunal or find out whatever the problem is and sort that out. And that surely is where this would go next.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabotja, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place, whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024.
Well, another report being released today, and certainly I saw it today, sponsored by British American Tobacco. They have the absolute right to do it, but making the point that so many of the cigarettes sold in South Africa are sold illegally. They say 75% of South African shops actually that sell cigarettes are selling illegal cigarettes. And when you consider the size of that, we heard from Professor Michael Fridge on last night about this, the size of the illicit alcohol industry, which seems to be growing. It's enough to almost make you just wash your hands of the whole thing and want to walk away. It seems almost impossible to stop the growth of illicit tobacco and alcohol. Got to be something for SARS to do. And I mean, obviously, there'll be plenty that they are trying to do. Some of it is very difficult. But what you're actually trying to do is to control, to an extent, the production of things that are very easy and cheap to make. And you can make them anywhere in a massive country. That's really the difficulty here. Solutions on a postcard or a WhatsApp voice note, please.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Confirmation now from the business rescue practitioner at Mango Airline, Sipho Sono. He will appeal a ruling that basically has stopped him from selling the airline to a private investor. In other words, it looked like the airline was going to be able to start flying again. The deal was stopped by a judge. One of the creditors, one of the people still owed money by Mango, wasn't happy. Guy Leach is the editor at SA Flyer magazine. Guy, good evening. I was scratching my head a little bit at this because Mango is still a subsidiary of SAA. SAA won't put money into it, but that does mean it's owned by government. And could a business rescue practitioner really take a decision to sell it? You would think government would have to decide that.
Yeah, hi, Stephen, and nice to be with you as always. Well, yes, you're 100% correct. Of course, ultimately it becomes government's decision, and government has to agree to the terms. And I mean, I have to say that this whole thing is a complete enigma. In fact, quite frankly, the whole deal still stinks. And what is extraordinary now is that we've seen, for the first price, the absolute miserableness of the offer that they're making to concurrent creditors of just 4.43 cents in the rand. I think that Mr. Sono is trying to pull a fast one. Well, actually, the judge has confirmed that he's been trying to pull a fast one by effectively double dipping on the creditors. On the creditors by selling them off to the so-called investor and then leaving them open for another bite. That, of course, defeats the whole object of a business rescue process. But, I think that government is perhaps a little more confident than it should be, because the business rescue process did, after all, work for SAA.
Okay, so, what is the best, what options are there for Mango other than sort of selling it? SAA has said on the record it won't put more money into it. It must have some assets. Someone should be able to get a price, but it does, of course, have debt.
Well, I've yet to see any assets. I just do not understand why anyone wanted it. Quite frankly, if I wanted to start an airline, and I wouldn't, I would start it with a fresh piece of, on a clean sheet. I wouldn't take over what remains of Mango. It's got nothing. As far as I cannot see any value in it whatsoever. It hasn't got the all-important AOC, which is an aircraft operating certificate, which can take 18 months to 2 years to get. It hasn't got any aircraft because they were all leased and they were all given back. It hasn't even got any staff. It hasn't got any routes because they've all long gone and been forfeited. So what possible value does the airline have, unless there's some sort of deal being struck behind the scenes that we can't quite smell with the unions, because that's obviously where the greatest element of pain and a sense of recovery lies.
So is the best thing then to just wind the whole thing up, forget about it, and that's the way it goes?
Well, I'd be a little contrarian here by saying I'd be very sorry to see if they chucked it out entirely. I think there's always been a good case to be made for Mango, because SAA itself is a full-service carrier, and it was really struggling to compete even 10 years ago against the so-called low-cost carriers, the Galileo of this world, the one-times, etc. So there's often a need around the world for airlines to have two brands, the full-service brand, with the sort of business class and so on, and then absolutely a no-frills brand. So I would like to see it survive, but if SAA doesn't want it, well, no one else is likely to want it.
I do wonder about the power of the brand, and I've made this point before. I went on an SAA flight earlier this year and was struck with a sense of nostalgia. The brand is still quite powerful. I'm fairly certain I would not have that sense on a Mango flight.
I think you're 100% correct. SAA is, 75 years old, a bit more. And, of course, it is the flag carrier, and if you're even vaguely patriotic, you're going to be patriotic about your flag carrier. But Mango is, it's a sexist title as well. What happened to women go? Is there any value in the brand? Honestly, it was for a specific purpose. If that purpose doesn't exist, I cannot see any remaining value in the brand.
And starting up a new airline from scratch in this market, you suggested earlier that actually you wouldn't do that. It does seem that you would face very intense competition at quite a difficult time.
It's a difficult market. The South African market has been badly overtraded for a long time, and also it's for years and years and years it complained about an uneven playing field with benefits to the state-owned carriers, even in terms of fuel deals and so on. So it's hard to compete against the state-owned carriers. FlySAF Air runs an incredibly good and efficient operation. Lyft is running a very good operation as well, and very cleverly as well, because they don't own anything other than they don't own aircraft. They're just an operating license, if you like, of Global Airways, which stays in the background. So it's extremely hard to compete against that level of low cost and start again from scratch. That's why I'd stay out of it.
Guy Leach, thanks so much, editor at SA Flyer magazine. Well, we all have different memories of airlines, of course, and you might well have very different memories. To mine, I'd be interested to hear them on 011 883 0702 and 021 446 0567. But it does seem difficult to see the business case for another airline operating in South Africa. And of course, the risk with the business rescue process is everything is just going to get mired in court. Then it becomes an argument about who was right. Very few people will be sitting back from the whole process and thinking, actually, this is the best thing to do for the airline, or this is the best thing to do in this situation just to finally resolve it once and for all. And I suspect maybe that's really where we need to go. What's going to be the best way to actually deal with this thing, because it is such a mess. And again, just a reminder, it is another casualty of two things: state capture and then sort of the pandemic. But all in all, there's still so many reverberations from that time in our society right now, aren't there? Good evening. You're with The Money Show at 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
Good evening, I'm Stephen Grootes. Thanks for being with us on The Money Show tonight. And of course, The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024. Plenty to come. We'll speak to Dr. Ron Whelan from Discovery Health. More, of course, on those findings around racism and medical aid providers in just a moment. It's all about claims from black healthcare practitioners. We'll talk about that in a moment. Dr. Utendo Ndwengwe, already here, the founding director of Tribe Africa Advisory. A look at what's been happening on our continent. And how are you feeling about your money at this point in the year, the midpoint of the year? Warren Ingram will have a way for you to determine how you're doing, your kind of mid-year check, if you like, from 7:30 tonight.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app
and DSTV channel 856.
There was a time when people used to talk about the hardest jobs in the country, and there was only one candidate for that position. Everybody knew what it was. It wasn't the president, it wasn't the Bafana coach, it wasn't the coach of Kaizer Chiefs, even them. It wasn't even the Springbok coach. It was all about being the Eskom CEO. Now I notice that the tenure of the current board of Eskom is coming to an end, and there's a sort of process that's underway. I think the Minister, Josian Makgopa, is in charge of that. It may just be an interesting indication of how things have changed at Eskom, that in fact we don't have that kind of view anymore. That's not what we're talking about. We're talking about so many other things. And I wonder how much interest there'll be from potential candidates to be on the board of Eskom. There might have been a time when people would have run away from anything to do with it. Famously, there was a sort of piece, I remember it very clearly, that something like 30 of our top business people at one point had been asked to be the CEO at Eskom, and they'd all said no. They'd all kind of run away. I'd have to check that number. But they'd all said no. I don't know if it would be like that now. I think now things might have changed. And the first indication of that will be how difficult it is for government to fill those positions on the Eskom board. I mean, sometimes when you give credit where it's due, it's not just in keeping the electricity on. Now, I say that as a lot more power is now coming from the Dupi finally, but it is also just on whether or not people want to work for you. And maybe, just maybe, the situation at Eskom has changed.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, the medical aid scheme Discovery is suggesting it might actually go to court to overturn findings that it's one of the medical aid schemes that's racially discriminated against black healthcare providers. That independent panel from the Council for Medical Schemes, they found claims involving black healthcare providers were much more likely to be investigated than claims from white healthcare providers. It said it found evidence of this practice at Discovery, MedScheme, and the Government Employees Medical Service and others. The Board for Healthcare Funders says it believes this panel has used the wrong methodology. Well, of course, one of the healthcare funds involved in all of this is Discovery Health. Their CEO is Dr. Ron Whelan. Ron, good evening. I do appreciate the time. You seem pretty, I don't know, frustrated, angry, maybe a better word, at the findings of this panel. Why do you believe they came to the wrong conclusion?
Well, thank you, Stephen, for hosting us. Much appreciated. I think your adjective is probably right there. We're frustrated and disappointed by the findings of the panel. It's been a long and arduous process where we've provided extensive input. In fact, 14 submissions to date. We've lent on international and local experts, including people from the London School of Economics, Deloitte, the previous statistician general from South Africa. And they really lent into the investigation process, opened up all of our data analytics and books, and are quite stunned by the outcomes of this investigation. I think, Stephen, it's also important to point out that fraud, waste, abuse, and errors is a very serious issue across the medical scheme landscape. In fact, it costs the industry around 30 billion rand a year. And when one thinks about that, that's 30 billion rand paid towards providers for services that weren't rendered. And the reason services weren't rendered, sometimes it's fraud, sometimes it's waste, sometimes it's abuse, sometimes it's errors. In fact, Discovery Health manages to recover somewhere in the order of 500 million rand a year. And were it not for those recoveries of 500 million rand a year, medical scheme contributions would be about 11% higher. I think we all recognize the challenges with medical scheme contributions. It's expensive to have a medical scheme cover, and any waste across the system results in higher contributions. I think, Stephen, also important to point out, and we'll get into the detail around the investigation now, in that fraud, waste, abuse, and errors impacts a very small portion of the healthcare provider population. So the vast majority of healthcare providers across the system, black and white, are entirely ethical and submit their claims in an accurate way and in good faith. Your medical schemes pay those claims. And what we're talking about in these investigations is a very, very small and narrow set of practices, both black and white.
Okay, hold on. I'm sorry, Ron. I've let you speak for some time, if you don't mind. You spell out that you have a duty, and I would agree with you, to stop fraud and waste and errors and all of that thing. That makes sense. It wouldn't excuse a racist approach in doing that. So then, with all of the submissions, all of the conversations, this was an eminent group of people on this panel. What do you believe they would get wrong? Because it would seem from their findings that a black healthcare or services provided by a black healthcare provider were much more likely to be investigated than if it were a white healthcare provider.
Yeah, I'm glad you asked that, Stephen. I mean, let me go through a few of the facts on this that perhaps weren't as clearly articulated in the Minister's statement nor the Section 59 panel statements. The first thing to note, Stephen, is that 78% of Discovery Health fraud, waste and abuse investigations come from member tip-offs or whistleblower reports. Now, think about that for a second. That's members who've spotted an irregularity on their claim statement, have spotted something untoward in their hospital admission or their provider admission. So 78% of investigations come directly from members. And I think if we're making allegations of medical schemes, racial profiling, and the source of the investigations is tip-offs, you need to ask some questions around that. The remaining 22% of investigations emanate from very sophisticated data analytics and algorithms that have been built over several years. In fact, the Discovery Health data analytics algorithm is built on 30 objective risk factors, none of which have any racial connotation whatsoever. In fact, we shared the 30 risk factors with the panel during the investigation. It's also based on member numbers and practice numbers. So we don't have any of the surname or name information in those analytical models. Those analytical models will look for aberrant patterns and look for aberrant trends and look for your higher risk cases. But once again, I want to highlight, Stephen, that 78% of the investigations come from tip-offs or members. Only 22% come from our algorithms. I think, thirdly, Stephen, it's important to point out that this is a very complex data set and a complex statistical analysis. And that's the reason why we brought so many experts into the analysis and investigation. The Section 59 panel relied predominantly on one statistical expert. And there were significant questions asked around the methodology employed by this particular expert that the panel deployed against us. And I think we're worried about the scientific rigor. We're worried about the statistical rigor. We pointed out a range of flaws in the analysis during the investigation. So this is what leads us to quite significant concern.
Okay, I mean, having a big argument of expert versus expert doesn't necessarily always help us, but I take your point. You suggest that if these findings are implemented, it would make it harder for you to stop medical aid fraud. Where would the extra difficulties come?
Well, I think the first thing to say, Stephen, is that we seek to do what's right in the interest of medical scheme members, and seek to do what's right in the best interest of their healthcare providers. So all we're looking for is an even playing field and an even-handed approach around this. We're not looking for anything more. Where there have been claims that have been irregularly paid for whatever reason, the claims have been irregularly paid, we're looking to recover those monies in the best interest of members. So that is our prevailing approach on this. Any legislation or policy change that potentially tips the scales, either way, I would say, to the benefit of your medical schemes or to the benefit of providers, risks swinging the system out of equilibrium. And by all respects, we have an outstanding healthcare system. We have outstanding healthcare providers across the system. Broadly speaking, the system works well. Medical schemes pay providers on a good faith basis. Providers submit claims accurately on a good faith basis. And we're concerned that we tilt the scales towards that gives opportunity practitioners more opportunity for elements of fraud, waste, and abuse, which would put medical scheme members and medical schemes at harm, and indeed the broader system at harm.
Okay, so I mean, I get all of that. You're threatening to go to court on this, on an interpretation of numbers, and considering the stakes here, it would probably be appealed, etc., etc., etc. If it went against you, Ron, it would be so damning in the court of public opinion. I appreciate you may have no other option and feel that you have no other option. It may not be you, may be the Board of Health Funders or someone else. But the stakes here are getting higher and higher.
Yeah, Stephen, I think it's important to clarify that this is an investigative panel. This was not a court process. And I think Advocate Mbeka made that clear in the statement. So this was not a court panel. In fact, the panel clearly highlighted that these are not legal findings and these are not legally binding findings out of the investigation panel. They're also not definitive findings. You'll notice in the report they speak about on the balance of probability. This would be the suggestion would be made. So the language is carefully chosen in the report. So you can't think of this as a particular judgment. And on the back of that, there's no follow-up on a legal basis. So there were no particular legal avenues to follow this because it hasn't been a legal process. But we will certainly continue to review all options and remedy to address what we believe is an inaccurate and unbiased and biased finding against medical schemes in this instance, and certainly against Discovery Health. We're confident in our processes. We've reviewed our processes end to end. I can tell you hand on heart, we follow a zero tolerance approach to Discovery Health against any bias, whether that's race, religion, ethnicity, doesn't matter what it is. So I think there's the one part, the regulations, and the second part, the ethics and the principles and the values that we seek to protect coming out of this process.
Dr. Ron Whelan, thanks so much, CEO at Discovery Health.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show, Africa Business Focus.
With Dr. Rotendo Ndwingi, the founding director at Tribe Africa Advisory, also, of course, author of the book Rumble in the Jungle Reloaded. Rotendo, good evening. Good to see you. The US, they're not all against us. They're building this power line from Angola to the DRC, $1.5 billion.
The US is spending a lot. First and foremost, a good evening to you, Stephen, and to your listeners. The US is spending a lot of time in Angola. Maybe it's because it's so close to the US. Maybe that's one reason. But recently, there's been another story. Obviously, Angola and DRC and Zambia have clinched a deal around power, but this one is related to a $1.5 billion investment with regards to a transmission line that is 1,150 kilometers long from Luaka in Angola, which is a power station, right through to Kolwezi, which is in southern part of DRC. It's estimated the project will probably finish in 2029 and produce about 1.2 gigawatts of electricity. So bearing in mind, along this whole route as well, there's the whole Lobito corridor. So a lot of activity there. The company that is driving this is Hydroline, which is owned by Symbion, which is an American company. They've actually gone to the U.S. government through the DFC and the USTDC, as well as the Import-Export Bank of the U.S. To ask for 70% of the funding. So the money is not really there from the private sector, but government will probably jump in on board. And at the end of the day, they're trying to address a deficit of about 700 megawatts of electricity that's in DRC. In the mining areas where copper and cobalt, and who wants copper and cobalt?
So we know the mining industry is here somewhere.
I think in Africa we say there's nothing for Mahala, and that's the case here. The upside infrastructure, the downside, there's a price to pay for everything. So it'll be interesting to see how this wraps up. But at the end of the day, it's development from an African perspective.
I mean, Chinese companies, they've got a stake of Nigeria's lithium and electric vehicle future. This is going to be very interesting.
Very interesting because it's a double whammy in the sense that, Stephen, it's not only with regards to producing and manufacturing lithium in Nigeria, but also in terms of manufacturing cars, electrical cars in Nigeria. So China has gone in double-handed, not double-handed, but with a double strategy. From a factory perspective, they've opened up, they're looking at investing in two key factories. One is by Jialing Company, and the other one is Canmax, both are Chinese companies. One factory is probably about $600 million of investment, and the other one $200 million in investment. And the idea is that they want to manufacture lithium. Apparently, Nigeria doesn't have a huge quantity of lithium. I mean, the biggest producers of lithium globally are China, Australia, and I think Chile. But what Nigeria has, it's got very good high quality lithium. I think the oxide there is estimated at 14%, where on average 0.4% is adequate. So it's great quality. But the other side is also they've teamed up with BYD, the Chinese electrical manufacturing company, car manufacturing company, and they're also investing in that. So from a Nigeria perspective, I think the states of Kaduna, Niger, Nasarawa are involved in all this investments. So it's a good story for Nigeria, and obviously it will go a long way with regards to work, employment, and industrialization of the region.
And then in the Sahara AI Africa, so basically the way in which many people from our continent speak actually has been a little bit difficult for some of the AI programs to understand. Have I got that right?
Yeah,
I mean, I don't make sense to myself, so I don't know.
From Shaw to Aish to Hakuna Matata. So it's voice AI, which is becoming a very powerful tool. I've actually got a colleague who specializes in this. But Sahara Voice AI, which is a Nigerian company, has actually gone into Uganda, Kenya, and Rwanda, and is working with the call centers there. And basically they've trained about 3.5 million clips related to 30 countries in Africa. Just to give you some sort of impression, Kenya has probably got about 41 dialects just in terms of one country. So basically what this does is just that it works with the languages, and in terms of call center activity, in terms of productivity, efficiency, and accuracy in terms of addressing things, this is where it comes into play. The company itself, Sahara AI, this is on the back of a $1.6 million seed round investment they got last year, and they're building up on this. So for me, the great story here is here's an African solution working in other African countries and also making an impact from a local perspective, because anything related to language, related to culture, which is related to our heritage as a continent, and it becomes an asset in the future. So it's an interesting story, and no pun intended, would like to hear the future of this and where it goes.
It's going to end with us all speaking our language and all hearing the same thing.
Yeah, which is powerful, because that's what you want, because you want to be able, and that's inevitable with AI. We're going to be able to speak in different languages, but we'll understand each other. So translators at those big UN conferences behind those glass mirror doors and windows will probably be a thing of the past. But again, another great story in terms of where it's going and what the impact will be from an Africa perspective.
Turning a Babel into a Babel.
Babel into a Babel, that's a very good thing.
And then Etihad Rail, they're getting involved in railway upgrades. And I mean, there's a lot of talk about railway upgrades here.
Yeah. So Etihad Rail, it's a UAE company. I mean, when you think Etihad, you always think of the planes. But the rail division has actually developed about 900 kilometers of rail in the UAE. They're doing a major investment in Africa with regards to rail infrastructure, focusing on East Africa and probably also coming to Southern Africa. Countries they focused on so far, Kenya, Uganda, South Sudan. Just to give you some stats, Stephen, just to show you the demand and where we lag from a global perspective. Africa has an average of 3.3 kilometers of rail per 1,000 square kilometers, where the UK and Europe on average at 44.6 per 1,000 square kilometers. When it comes to passengers, Africa is on average carrying about 1% of its population on rail, whereas Europe is carrying 18%. So the demand is definitely there. The question is with regards to investment. At the moment, we probably need about $85 billion with regards to developing the 83,000 kilometers of rail. And the estimation from the AU is that by 2074, and it's always funny, they give these, it's like a cricket score, 2074, They want to invest about 3.4 trillion US dollars. The Chinese are involved as well as one or two British companies, but it's again the UAE investing in Africa and not in the traditional ports or minerals or energy spaces or agri, but in terms of infrastructure, and hopefully that will translate on the positive side. So all these stories, US, Europe, the UK, definitely there must be something in Africa worth all this investment, which we know what it is.
It's the search for yield, eh? Money's got to go somewhere. I think that's really the issue. Dr. Rotendo Ndwingi, thanks so much. Founding Director at Tribe Africa Advisory, author of the book Rumble in the Jungle Reloaded, some of what's going on in our continent from a business point of view at the moment. In a few moments, Warren Ingram, Personal Finance, your half-year finance check. How are things going? What direction are you moving in? Also known as half an hour with no mention, one hopes, of the T word. You with the Money Show, just gone 7:30.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabotja, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show.
Personal Finance with Warren Ingram.
And a reminder, of course, Warren Ingram is a certified financial planner at Galileo Capital. I don't know if you really want to look at the calendar and see where we are in the year, because we're actually just past the halfway mark. The winter solstice, thank goodness, was already 2 weeks ago. And so we're kind of heading straight for December and hopefully a little bit of warmth. Time for a mid-year financial check. Warren, good evening. I feel a bit like I'm at the doctor, actually, and you're about to hit my elbow with a hammer, kind of. What exactly do we need to look at when we start with our check? And you first suggest we look at our emergency fund.
Yeah, and it's never a bad thing, Stephen, to know your position. I mean, if you start the year and you're bright-eyed and bushy-tailed and you make some plans for the year ahead, hopefully, plans that are meaningful to you, then at some point along the way, you should say to yourself, how am I doing and where am I going and am I on track? And if you're not, what am I going to do about it? All good things to do. And so, yes, this is the doctor's room for your money for the 6 monthly checkup. And the emergency fund for me is in a time of, I would guess now after Trump's announcements, even more uncertainty than before. The emergency fund is the one antidote we all have to this kind of uncertainty that could impact us. I think about people in the farming industry now, especially if you're in citrus, you're probably very worried. And so in a situation like that, having an emergency fund is your protection. It's impossible for people to kind of protect their earnings forever, for their entire career. I think that's a very difficult thing to do. But certainly buying some peace of mind with your emergency fund, I think is something we can aim for. And so the starting point here is, we've said it on the show before, you need somewhere around 3 to 6 months worth of your expenses in an emergency fund. And I think it's the fundamental aspect of all of our financial planning if we want to get to a point of freedom somewhere along the line. And so that's step one. Have you got 3 months? If you have, well done. If you've got 6 months, even better. And then don't worry about it. You can move on to step two. However, you might be in a position where you don't have that. And then I would say, well, if we're in a situation where you've got an ideal range, which is 3 to 6, what's the real red flag? Where should you be worried? And to me, the real red flag is if you've got less than 1 month's worth of expenses in an emergency fund, in money that's available to look after you, at very short notice for things that are not planned for real emergencies. So I think step one is let's check that emergency fund and make sure that we've got enough money. If we don't, and you've got less than a month, then I think you need to take some serious action as soon as possible to at least get to that 1 month's worth of expenses now and get it set aside just to protect you against things you cannot foresee.
I suppose that really is, if you can't cover things for a month, you are in a difficult position. Okay, then a debt to income ratio. This is about how much money you get every month and then watching the SMSs go out.
Yeah, and it's actually, it's something that we monitor when we talk about countries, and what's their debt versus the size of the economy, and we look at companies and we worry about how much debt are companies funding from the income that they're generating, and I think it's a very interesting ratio to work out for ourselves. So very quick math lesson, but if you take what you spend in a month on debt, so how much does it cost you to repay your debt every month? And you divide that by your total salary, in other words, the salary before all the deductions and taxes get taken off, and you multiply that by 100, you get to a percentage. So just for example, let's say you earn 10,000 Rand a month and you're spending 1,000 Rand a month on paying off your credit card, and that's the only debt that you've got. So you would take the 1,000 Rand a month, you divide it by 10,000, which is your salary, and you get to a number, and I believe it's 0.1, and then you times it by 100, and that gets you to a number of 10, and that tells you that your debt to income ratio is 10%. And for a business, a person, and possibly a country, that's an extremely healthy ratio. We obviously don't really want a lot of debt in our lives, but I would suggest that if you're spending 30% or less of your total salary on debt repayments on a monthly basis, you're okay. You're not in a great position, but you're okay. That's not a red flag for me. But if you go over 30% and you get closer to 40%, then you need to know you're in a danger zone, because taxes are probably 30%, and then you're paying 40% of your income to debt, which means you don't have a lot of money left over for food, entertainment, school fees, rent, and all of those things. So I would say that's a good ratio to work out for yourself now. It might be scary. The thing about bad news is it's probably always worse when we don't know the real story. And so we put it off and we don't want to look at it. But my suggestion is this is the time. This is where you look at it, you kind of write that ugly number down, and then you work out a game plan for what you do to start getting your debt down, because you've got a few months, nearly 6 months left of the year to go, and you don't want this problem to get bigger and bigger, and by the end of the year, you're really grappling with an enormous problem that's compounding against you. So it is the half-year health check. Take time to look at this number, and then take some steps to get that debt repayment down again. And if you've got to make some tough decisions, make them now before they become much bigger and much tougher problems to deal with.
Okay, so 30%, up until 30% of your monthly expenses going to debt, that's okay. But 40% or more, you need to take action.
Yeah, and it's one of those things where you need to get on the front foot. What you don't want to do is be in a position where, the bank comes knocking and takes your car because you can't afford the debt repayment. What they'll do with that car is they'll put it on auction, and I promise you that price is not going to be as good as the price you can get if you take control and sell that car yourself. So that might be a radical step that you have to take. And for some people, we read horror stories about their houses being taken by the banks. Obviously, there's a long process, but they lose the house. The house gets auctioned for terrible value. If you're in that kind of a position where the debt is growing from 40 to 50 to 60% of your total salary, you need to take serious action now and get ahead of this, because you want to sell your assets so that you get the best price, that you get this debt down and take some control. Don't let the banks and your creditors take control. They don't have your best interest in heart. They want to pay off the debt and get the money back that they are owed. That's their concern.
And then looking at your savings rate over the last 6 months, what kind of questions would you need to ask yourself?
So I think, look through what you've earned over the last 6 months. That's not that difficult to go through on your banking profile, and then see how much of that money have you actually saved. We will tell you, often that you should be saving kind of, at the minimum, somewhere around 10 to 15% of your salary on a monthly or yearly basis. So we're 6 months into the year. You've seen what your payslip was like in June, so you've got all the data you need for the first 6 months, and work it out, and see, if you're earning back to the 100,000 Rand. Let's say you've earned 100,000 over the year. Have you saved at least 10,000 to 15,000 of that for long-term savings? That's part of your kind of deposit for a house money and your retirement money and your financial freedom money. If you have, then you're doing the minimum, which is good. I mean, well done. You've achieved something so far for the year. If you haven't achieved that, it's important to kind of sit down and work it out. What went wrong? If you started the year saying, I think I can save 10 to 15%, what's derailed the plan? And more importantly, how can you prevent that from derailing you for the next 6 months? And what sort of action can you take to make sure you play a little bit of catch up? And I think that's, again, it's something where we can make a small change now and a little bit of an adjustment, make up for some lost time, and hopefully end the year achieving that savings goal. You didn't set that goal for fun. You set that goal because you want to get to financial freedom.
I mean, also this time of year, I mean, maybe it's just me. I've started to think about the end of the year, holidays, things like that. What's going to happen? Will there be one? You need to plan for things like that too, or even to determine if you're actually going to be able to go away.
Yeah, and let's say that you do get leave over December. The good point now is you can look at what's gone on in your finances. You can understand your financial position, and then plan the holiday according to the income and expenses that you have today. So I think a lot of the time people don't plan at all, and they don't actually make the bookings and all of those things. So they get to October, November, and then they start planning frantically to try and find somewhere to go. And obviously by then, what's left is either garbage or super expensive. And so planning now means that hopefully you get some access to places, but equally that you can go to places that actually suit the budget that you have rather than the lifestyle you think you should be living. So, if money's tight, then, where can you go camping? If money's tight, can you go and stay with friends on a countryside house or, on a farm or something like that? You don't have to go and live large, in the waterfront and, compete with all the foreign tourists and their huge budgets. You can do things that are fun, that aren't that expensive, but you can't do those things if you don't plan for them. And planning starts now, and figuring out, how much money you can set aside on a monthly basis for those holidays, so that you don't start in January again with debt and on the back foot before you've even got going.
It's a fascinating question. We've got a question from KG saying, hi guys, I haven't heard from my financial advisor for 2 years. I see from my statements that they're still earning a fee from my investments. Is this correct? We'll find out from Warren Ingram in just a moment. 12 minutes now to 8 o'clock.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabotja, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024.
The Money Show.
Personal Finance with Warren Ingram.
And we had a question from KG Warren saying, hi guys, I haven't heard from my financial advisor for 2 years. I see from my statements he's still earning a fee from my investments. Is this correct? And KG reminds us how carefully you need to check your statements, Warren.
Gee, this question is making my blood boil. The answer, KG, is that it's absolutely wrong. It's wrong from a moral point of view, it's wrong from an ethical point of view, and it's actually against the law. So the law that that applies here is around something called the Phase Act, and we don't have to go into all the detail. But at an absolute minimum, if you've got a financial advisor who is looking after your investments and earning a monthly fee from them, this could apply to investments, but equally to life assurance and all of those things. If you've got an ongoing relationship, they have to correspond with you. So they have to send you at a minimum something in writing which explains that your investments or your products are still going. What are the obligations that you've got? If you've got debit orders, what are the values? What are the benefits? All of that information, and then any fees that they are earning. And if you're not getting that as an absolute minimum, then what's happened is they have just done a transaction with you. They're earning fees, and you're getting no service and actually I would say if it's investments, they're going backwards as well. So there is no way that that's correct. I would report this person straight to the FAIR's Ombud if I were you, because they know their obligation. This is not a new thing, and certainly not going to be a surprise. But it happens quite a lot in the industry, Stephen, where advisors take on probably 150 or 300, sometimes up to 500 or 600 clients, and there is no way that you can have a proper one-on-one relationship with that many people as an advisor looking after clients. They're not clients; they're just transactions that you've done. So I think for KG this is really bad news, and we should hold advisors to account. It's great that they get paid for delivering good service, but when they're getting paid for doing nothing, for having sold you a product some time ago, then you should take them on. You should call them out. And if you don't want to report them, then make contact with the product provider and tell them that you are firing your advisor and you don't want to be charged a fee at all for advice.
And they have to listen to that, do they? The people who you're getting the product from, the big providers.
Absolutely, they have no choice. You're not obliged to deal with an advisor in a situation like this. If they refuse, what that means is they're enabling an advisor to continue breaking the law. So they must listen to you. And in fact, to give credit here, some of the product providers would be horrified and actually would blacklist those advisors as well. If this is something that an advisor is doing, as part of their business practice, a lot of the product providers would want to know about it so that they blacklist that advisor and they don't get associated with this.
Okay. Investment performance. So let's just go back to the sort of 6-month health check, the mid-year health check that we're doing here, and sort of tapping my knee with a hammer. The investment performance, we actually need to look at how your investments are doing, because this is the other thing. You've invested money. There's no point having money that's not performing for you.
Well, I think it's number one. What my first comment will be: let's say you've bought a unit trust that invests in the South African stock market. One of the things you would like to do now is to check what is your investment done. You've got 6 months of history. So how has it performed? And then the other thing to do is compare that to the performance of the all share index, the South African stock market for the last 6 months. And that's information that you can find pretty easily on the internet. It's not hidden. You don't have to pay for it. But for interest, from the 1st of January to the end of June, the South African market's given a bit more than 16% for the first 6 months of the year. So what you want to do with your investment is, if you're in a pure stock market index, unit trust or exchange traded fund or whatever it is, and your investment has done roughly that amount. It doesn't have to track it exactly. So if it's done 14% or it's done 18%, somewhere around there, then what you do know is it's doing its job. It might not be doing it perfectly, but investment is not an exact science. So then you could say to yourself, it's doing okay. And similarly, if you've got a global investment, understanding what the global markets have done and how has your investment performed relative to that. And so you would go across the board. If you've got a balanced fund, balanced funds would have a lot of exposure to shares, but that also have exposure to bonds and cash and property. And for the first 6 months, all of those assets have made money. So if you're in a position where you've got a balanced fund that's lost you money and all the other aspects of the markets have gone up, it tells you that you've got something that's gone wrong. And then you need to do some real homework to understand, why is your balanced fund not doing well when all the underlying components of those markets have done well? So I think it's, equally, if we were sitting here and the global markets were down for the year, the JSE was down for the year, and maybe the bond market as well, and your portfolio was down by a similar amount, then you understand the tide has gone out, your investment is down. That's the unfortunate part about investing. You will lose money from time to time. So it's about understanding the environment in which your money is working, and then how is it performing relative to that environment. And at the moment, things are going well. Despite all the bad news and despite all the drama around the world, markets are performing well, especially in South Africa. So it should be a rewarding time. You should be looking at positive statements now, and if you're not, then you need to ask some serious questions.
It's very tempting at this point to sort of compare yourself. Personal finance advisor said, do this, and this is how much money they've made, and I've only made that much. I mean, should you be comparing with other people?
No, I mean, I think, understanding that when you've set your goals, your goals are determined by your appetite for risk, your financial position, your time horizon. So there's so much that's unique to you. And comparing what you've done to the person next door, you might well be comparing, an apple to, a roast pork, just so completely different. And then expecting that, a good outcome if you then adapt your investments to what your friend has done, where they might have a totally different position and risk tolerance. So I think it's much more important to compare your investments to their own universe, what they're supposed to be doing, and then knowing that you're on track or not relative to yourself. You're not in a race with anybody. Your job is to set your own objectives and then reach those. And I think a lot of the time people make the mistake of comparison. They look at what the world has done or what the markets have done, forgetting, for example, that they can't tolerate losses. So if you can't tolerate losses and you see, well, the JSE's gone up 16% for the last 6 months, and suddenly you swing all your money into the JSE, and then it promptly loses you 16% over the next 6 months, you're only compounding really bad mistakes on yourself. So the comparison game in the investment world is really a bad way to make long-term decisions, and you should really avoid it.
And very quickly, the rand also has an impact, right?
Yeah, I think, understanding now that, a lot of our balanced funds, for example, can allocate 45% of their assets overseas. So when we've watched the rand go from 19 to the dollar all the way down to 17.50 or nearly 18, it does have an impact. It will mute the returns that you're getting, but understand that cycle will turn again. So just know that the rand is now a factor in a lot of our retirement funds and a lot of our balanced funds, much more so than it was 5 or 10 years ago. So just be aware of that when judging the performance of your investments.
Warren Ingram, thanks so much. Co-founder of Galileo Capital and a good doctor to speak to for your financial health at this time of the year.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024.
Well, you heard Warren talk about a little bit of instability or volatility, rather, on the markets. Just this evening, the US President Donald Trump saying that the Federal Reserve Chair Jerome Powell should resign immediately. And you can imagine what that's going to do to markets. All sorts of speculation around that. For the moment, the Dow is down 0.37, the Nasdaq up 0.08, and the S&P 500 is down 0.03. So markets still going through the impact of tariffs as well. And overall, the big takeaway, of course, is that no one knows what's really going to happen with tariffs. We may think we do, but it does look like things are still changing very, very quickly. We'll be back with you tomorrow. Good evening. It's 8 o'clock.